Hey guys, welcome back to another video. Today we're going to be discussing protected highs and lows with a complete trading model. A super important topic that I want to discuss here, and ultimately again, my focus as always is to keep it as simple as I can. So let's get right into it. Number one, let's talk about our agenda. So first we're going to define a protected high and low. We're going to talk about its significance. Then we're going to talk about how we can identify a protected high or low, a visual of it so we can really understand it. Then we'll dig into some case studies followed by a complete trading model. So definition here, a protected high. A protected high is a swing high that is unlikely to be returned to before price continues lower. And of course, as we continue the presentation, we'll explain why. And on the other hand, a protected low is a swing low, that is unlikely to be returned to before price continues higher. And we'll explain why again as we continue forward. So moving forward, significance. Why is it important? Why is it necessary to be able to correctly identify a protected high or a protected low? This helps us identify a correct dealing range that price is currently operating in. Okay, so then at that point, we can correctly identify premium for our short entries as well as correctly identify discount for our long entries. Okay, also, this will help us distinguish, and this is the most important part, if price will draw to the dealing range high or the dealing range low, which allows us to easily frame trades. So the hard part, of course, before any model, let alone Macro Power of 3, my model that I use day in, day out, our priority is finding the correct directional bias, finding the correct draw on liquidity, finding the correct dealing range, which is essential to gauge discount and premium. We all know this. Okay, so identifying a protected high and low, again, to reiterate, I can't overstate its significance. It's very, very important to be able to identify this because then, the entry model, Macro Power of 3, these lower time frame signatures, when we ultimately get involved with price for a trade, then that part is super easy. Okay, so we need to be able to identify clear draw on liquidity and understand not only where the dealing range is, but are we going to draw towards the dealing range high or the dealing range low? Okay, so let's paint this picture and go through this visual. So first, we're going to be talking about protected highs, which will frame a Macro Power of 3 short setup. So if we're looking at price here, we can see that we have this high, which is going to serve as our dealing range high. Price expands lower, and now we have our dealing range low. Okay, so what was the trend while price was printing here? It was bearish. But how do we know if this move up when we formed our dealing range low was a reversal or if it was just a retracement to go back down and continue this bearish delivery? Okay, we need to understand protected highs and lows to be able to determine this. So continuing forward, a protected high, and this is the main part to identify a protected high. We need to look at the left side of the chart relative to this dealing range high in this case to understand what else occurred there. Okay, to identify a protected high, we're looking for one of two things to occur. In SMT, so essentially I'll use NASDAQ, so the SMT correlated would be ES, that's what I use. So I want to look for an SMT with ES and or a session high sweep. Okay, so this could be a previous day high, this could be a London high, any sort of significant buy-side liquidity taken out, and then we see a turnover, displacement, in this case to sell side. That paints the picture for this high as a protected high because the business per se is already done up there. Everything's taken care of. Okay, so when we see an SMT, when we see a significant high swept, and then we see displacement lower, that should catch our eye, and we should look at this high and say, okay, it's pretty likely that that is protected. So in other words, it's unlikely that price is going to return there, but we still need to understand why price should continue lower. So now we're looking at the dealing range low. Okay, let's continue forward. I've added onto this chart right here secondary DOL, secondary draw on liquidity. So we not only want to see this high be a protected high with an SMT or a session high being swept, we want to also look for our continuation cause, our reason why price should deliver lower. And we want to see dealing range low fall short of a secondary draw on liquidity. This could be a session low. This could be a key opening price. Think midnight open, think new week opening gap, new day opening gap. We want to look for 2 or more draws on liquidity at the dealing range low. That not only tells us, okay, we have a protected high up here, but we also have a clear reason to expect lower prices and this bearish continuation to continue. Okay, so protected high, engineered liquidity as our dealing range low. Okay, now continuing forward, once we've identified these two things, how do we get involved? How do we use this information to ultimately put on a trade? Well, if you've seen my channel before, if you've watched ICT's content, which I'm sure 99% of you have, you know he talks a lot about time, the element and the value of time. Okay, now I incorporate 99% of my trades with these macro windows. Okay, it's very rare that I'm operating outside of these macro windows. And this is from X50 to X10. So 950 to 1010 is a common one, 1050 to 1110, so on and so forth. If you're new to macros, go through my channel. There's plenty of videos. I'm talking about macros in virtually every teaching, every lesson. But to get involved in this, I want to see time and price aligned. So the price aspect of it is this dealing range high, right? We've established we have a protected high. And we've also established, importantly, that the dealing range low is a likely draw on liquidity because it fell short of that secondary draw. Okay, so if we see price go upwards, where is it going? The only reason it would go up would be to return to a premium and trap longs one last time. Okay, and we're not playing breakout longs here because we understand price in this way. We understand that it goes to engineered liquidity pools and not protected liquidity pools, protected highs and lows. Okay, so we want to see for our entry criteria, MO here is macro opening price. This is just kind of to depict the starting point of the macro, of course, but ultimately where price is going first to serve as the manipulation phase relative to the macro. Okay, so you want to see price go above macro's opening price into a premium of our dealing range using the protected high and the engineered low and run this high. Okay, this is manipulation. This is what you want to see. So if we're down here in this case and the macro is beginning, if you're waiting to get involved, you don't want to see price just spool down. Of course, that will occur sometimes, but you want to see price manipulate one more time because at that point, when price is up here, if this is a protected high, what else is there really for price to do up here? Nothing if we're correct in our assumption that the draw is lower. So all we're waiting for at this point is for price to give us confirmation that, okay, it was manipulation and now we're going to continue lower. And that is a close below this macro inversion right here. Okay, because think about it again. This is a BISI, a bullish fair value gap. If we were to remain bullish, would we want to see a sweep into a premium and then that just fail? No, it should have sent us higher and the bodies tell the story. So it should just come into it and continue higher. But we know that we have a protected high up here and that this is likely to fail. Okay, so all we're waiting for is that close below. You go short, your stop is above the swing high, above the inversion, and then you target the dealing range low as well as the secondary draw on liquidity. Or as we'll see in the case studies, there's plenty of times, and the more the merrier, when we'll have multiple session lows, a key opening price, a new day opening gap, the dealing range low, all stacked on top of each other. And that is best case, right? Because to keep it as simple as possible, you're looking at the dealing range high and saying, okay, there's very little reason we should go up there. And then you're looking at the dealing range low and saying, okay, there's a very strong reason that we should go down there, right? Simply put. Okay, so this is how we can identify a protected high and ultimately enter on a macro power of 3 short setup, okay, using basic stuff, right? We just have to lay the framework here. Let's go to our next example and talk about a protected low for a macro power of 3 long setup. Okay, so again, if we're looking at this dealing range, how can we understand if this push up when you have this bullish trend was forming a intermediate to long-term high here, and we're going to see a retracement, a reversal, I should say, all the way back down to the dealing range low, or if this is just a retracement to go higher? Well, we're going to apply the same logic. So we need to look at the left side relative to this dealing range low and look for things like a session low sweep, or again, in SMT. In some cases, many cases, it'll be both, which is best case. Okay. But if we have that SMT, that's such a strong reversal signature, in this case, a strong bullish reversal signature, we want to see that hold. There should be no reason for price to go back down there as long as we have our continuation cause. And as we see here, a secondary draw on liquidity. You want to see that secondary draw on liquidity be right above your dealing range high. And then you can look at both sides of this dealing range and say, okay, the low should be protected because we have an SMT and or a session low swept. And the high is a likely continuation draw on liquidity because it fell short of another secondary draw or multiple secondary draws on liquidity. Okay, so continuing forward, just like the first example, we're just flipping the logic. Let's break this down. We want to see price do what? We want to see price go below macro opening price to manipulate and run a swing low, run internal sell side liquidity. So again, look at this dealing range over here. You want to see us go into a discount because now we're talking about a long setup, and all you're waiting for at this point is price to close above this bearish fair value gap or SIBI, okay? Because that is telling you that this was a fake move lower, and the close above is what? Confirming that bearish order flow is breaking down, and we should expect delivery up to our dealing range high and whatever secondary or third or fourth drawn liquidity that we're seeing in that fractal of price. Okay, same thing. Close above is entry, stop loss, swing low below the inversion. Okay, and then you see that delivery beautifully there. So this is what we want to look for. It's simple, which is how we want our trading to be, and it really just ties in time and price together, not only giving you the necessary requirements relative to price for what you want to see for an entry, but when you want to see these things occur for the best of the best cream of the crop setup. So let's continue forward and let's talk about some case studies. Okay, so these examples will be on majority of the time the 1 minute chart. I think there might be one or two examples on the 2 minute, and that kind of coincides as a side note with my trading as well. I'm typically on the 1 minute for the majority of my trades. Of course, you need the higher time frame narrative, but for my actual entries, I'm on the 1 minute. Sometimes I'll go to the 2 or 3 minute if there's no clear 1 minute entry. That's for another video. But let's talk about this logic. Let's talk about these examples. So example number 1, as you can see here, just fast forwarding, we're operating within the 4:50 a.m. macro. So that means it's the end of the London kill zone. So this video, the things that we're talking about, this model that we're breaking down, it's not solely focused or applicable to the New York AM session or New York AM session macros only, right? When you see these things in price, these signatures, I would reprice the same way, whether it was the 4:50 a.m. macro or the 9:50 a.m. macro. Now, of course, there's slight nuances when there's red folder news, or if it's seek and destroy, whatever, that's for another video as well. But these concepts are what me and my group use, whether they're trading London or I'm trading New York session, right? I'm a New York session trader. The majority of my trades will be in the morning. Sometimes I trade in the PM session. But today, actually, at the time of recording, there was a great A+ protected low macro power 3 long setup for the 8:50 a.m. macro. So ahead of that 9:30 open. So it really just, matters what price is telling you when you're looking at the chart. So let's break this down again. You see price over here, it's coming lower, and then you see boom, an SMT. Okay, you see that reversal up here. Now, again, ultimately, you want to enter down here, but there's plenty of times where we miss that, whether you're just getting onto the charts, you weren't at the charts, or you didn't have the confidence down here and you wanted to, you don't like calling bottoms or trying to call tops, which is where a lot of traders get caught up, where a lot of traders take the majority of their losses, to be honest. So if you can allow them to build that low and show you that, okay, this SMT is building our protected low, 8 to 9 times out of 10, it's going to give you some form of retracement and ultimately entry anyways if you use this logic. So there's no need to rush into calling a bottom if you don't have that logic there. So if that's a dealing range low and price is continuing higher, you're looking at this high and saying, okay, well, why is this our engineered liquidity? Why is this a draw? Well, yes, the trend's been bullish, but what is that falling short of? Asia high. So another session high. Okay. And when we see that dealing range high fall short of a session high, that is our secondary draw on liquidity, which is such a strong depiction on what our bias should be. Okay. Ultimately, we see that occur there. Price dips down lower. Now, when price is coming down lower, this is our dealing range on the right side. All it's doing is coming down to a discount. It's not coming down to seek this dealing range low because that's a protected low. So all we have to wait for is our criteria. You have 450 macro open. We go below. We're running this low along with this relatively equal low. Then all we're waiting for is the close above the inversion as our entry. The stop loss can go the swing lows below the inversion. Then we see great delivery up to our dealing range high and ultimately the Asia high. Okay, so it's everything we've kind of been painting out here as the framework when we were talking about the visuals, but now we're seeing it in real form. Okay, example number 2. This is going to be for a protected high. Okay, now the previous example was, of course, for a long, a protected low, but the previous example we discussed the SMT aspect of it to identify that protected low. In this case, there wasn't an SMT, but see how we ran previous day high here. And then ultimately, again, you run a lower time frame high here, another one here, and then a clear V-shaped turning point here. So understanding not only this turning point, but that we've swept significant liquidity paints the picture, starts to lay that framework that this is a protected high. Okay, now once we've established that likelihood, you're looking at the other side of the range and building that hypothesis, building that argument for why we should get down to sell side, why we should continue lower, and when price comes up here, why we're not going to go back up here. Well, again, you have this is our dealing range low when we start to retrace before our macro window. But look at the left side of the chart, which is what we always need to do. We're falling short of AM session low. That's one draw. AM session low fell just short of midnight open. That's 2 draws. And midnight open and AM session low both fell short of what? London low. Those are all magnets for price. So you're going to see many times where you have more than 2, 3, 4 catalysts for price to go lower. Right? And that is the most important thing to frame your bias. Then your job as a trader is to literally just wait for the entry criteria. Okay. And on that note, price comes above macro open. Look where we're going, into a premium. So if you drag out this imaginary line here, okay, that's 50%. We're running a high here. We're running these internal highs right here. And then again, we're just waiting for our inversion as our confirmation. This BISI gets close below right away. That's our entry. The stop is above the high. And we see delivery to the dealing range low, to the AM low, midnight open, and London low. Okay, so see how we can really paint this framework of, okay, significant session high, previous day high swept with clear lower time frame reversal signatures. And then you're looking at the opposing side of the range and you're seeing multiple magnets for price. Okay, and understanding your simple entry model with time and price, your focus is so refined on the basics that you need to focus on. Okay, clear draw, macro window, inversion entry after a sweep. It's just, that's where you're focused on. Okay, and it's super, super simple. Okay, so let's continue forward. Example number 3. Now we just talked about a session high being swept a previous day high to identify our protected high. In this case, we're back to an SMT. So you see a clear SMT right here to build that argument for that being a protected high. You see us spool lower. Okay, then you're seeing us go higher, chop around a little bit. Ultimately, we're entering the 1250 macro. Now, what are our 2 draws on liquidity right here? You have lunch low, so a session low. That is a draw on liquidity. Session highs and lows are where price is going to gravitate towards. And then right below that, you see your dealing range low for this leg. Okay, so you have, and this should say draw number 2. Okay, that's a little typo. But you have 2 draws down here. Okay, 2 magnets for price after such an aggressive move lower with a protected high at the top of the range. That builds your bias for, okay, during this macro window, my job is to look for a short setup. We go above macro opening price. You have this BISI. We close below. That's your short entry. Your stop is above this high. And note how price is stopping right at 50% of this dealing range that we have painted out there. That's what you want to see. And then you just want to see this bullish order flow breakdown. Close below is entry, stop above the high again. And ultimately we deliver down to lunch low and down to our dealing range low. So see how it's rinse and repeat. It's very simple. Majority of these setups look exactly the same, which is how you want your trading to be. Okay. Example number 4, another protected high example, SMT here. Okay. And again, this was actually an SMT. So this high was an SMT with this one. And this is a little funkier one, but I should point it out. And then that SMT held during the macro. So we did see that sweep, but ultimately an SMT holds as long as the initial high or low doesn't get invalidated across both assets, NASDAQ and ES. But this is holding. And again, you're seeing that be built as a protected high. So it was already a protected high, this one. And then you just saw an additional sweep. That doesn't invalidate that SMT is the point I'm trying to make. So this is still a protected high. And you're looking at the opposing side of the range. This is a smaller dealing range. This little leg right here, you kind of had a choppy open. You can see this is the 950 macro. But look what this dealing range low is falling short of. A data low, which is a very strong draw on liquidity. Okay. A London low, an Asia low. 4 magnets for price here. I know I have 3, but also, technically the dealing range low. 4 magnets for price for us to aim towards with a protected high above because of that SMT. What's our job? To wait for the macro power of 3 short. Above macro opening price, run this high, SMT holds, close below the BISI, that's your inversion, stop above this high, delivery down to the dealing range low, through the 830 data low, all the way down to London and Asia low. Okay, rinse and repeat, same things over and over again. Okay, and last example here, same thing for a protected high. You see a very prominent SMT right there, and then price goes lower. Now, again, it's like when you look at this low, it's, well, we already had a sweep. Shouldn't it go back up to these equal highs? Well, no, you need to understand there's a protected high here. And when the dealing range low is falling short of that secondary draw on liquidity, that is going to be the priority for price to gravitate towards. Okay, so you see this dealing range low, and what is it falling short of? Previous day's low. It's right below it. That means this whole leg up, any move up is suspect, and that's just inducement before finally continuing lower. And when do we time the finally continuing lower? When do we expect that to occur? We use macro power of 3 entry criteria. That is time and price, ladies and gentlemen. That's what we're waiting for. And it's so simple. You just have to wait for these setups. It's not a 100% win rate, but you just have to wait for these setups, right? We see macro open here. Price goes above. Where is it going? It's going to a premium right here. It's running this high. 2 consecutive BISIs. We close below right here. So this is actually the entry right here, but your stop goes above this high. And then we see delivery down to our dealing range low, which was that engineered sell side liquidity pool. So again, I can't stress it enough. You look at a dealing range. If you can identify that protected high, all you want to see after that is identify a engineered low and flip it around when you're looking for a macro power of 3 long. Okay, it's rinse and repeat. It's time and price. It's super simple. So let's talk about and kind of just summarize this model's checklist for first, a macro power of 3 short. 3 simple bullet points. Can we identify a protected high and an engineered low? Right? If we can't do that for this logic that we're discussing here in this video, if we can't do that, we want to wait for a scenario where we can do that, right? And that requires what? The biggest skill set, patience. That should be your biggest strength. When we do identify those things, we want to wait for what? A liquidity sweep into a premium of this dealing range with the protected high and the engineered low. And of course, that is occurring, as we have established, during a macro window. Okay, now ultimately, at the end of it, all we're waiting for when these things occur, bullet point number 1 and bullet point number 2, is a close below the inversion. That is our entry confirmation. Again, stop loss above the high, above the inversion, and targeting the engineered liquidity pools. Okay, Moving forward, for our macro power of 3 long entry criteria, it's the same logic. You want to identify a protected low and an engineered high. Number 2, once you've established bullet point 1, you're looking for that liquidity sweep into a discount during a macro window, because we don't just rely on price, we rely and understand the value and significance of time as well. These macro windows are very, very powerful. And lastly, for the final confirmation, you're looking for that close above the inversion, then your stop loss goes below the inversion, below the swing low, I should say, to be clear. Swing low below the inversion, and then targeting the engineered buy side liquidity pool. Dealing range high and whatever session high or key opening price above that as your second or third or fourth or fifth draw on liquidity above that is what you want to aim for. Okay, so thank you guys for tuning into another video. If you are not subscribed, please do so. I have a lot of interesting things coming. I have a lot of value on the channel. If you're new as well, go back and look at those videos. Really excited, going to be talking about more of these examples, and really go back into your charts and look at these things, as well as forward testing. I'm sure, I mean, like I mentioned earlier in the video, we saw some today. It was this logic, and it's just a coincidence at the time of recording. This logic printed me like 300 points or like 290 points today on a long that literally gave me the low of the day. It just happened to be today. It's not every day, but you're going to see this logic, which is super, super simple, occurring over and over and over again, right? And your job is really just, as the trader, for you performing, is to wait for this to be super clear and not tilt and not be emotional and FOMO in between. You know, I always say the traders wreck themselves during the in between because they lack patience, because they take a loss and they think the market just owes them something, and they get right back in a way with no model, no logic, and they're just spiraling out of control emotionally. If you can master those things and then just wait for high quality, clear setups when you have a protected low, when you have a clear draw on liquidity and you see your entry model, that is good trading. You can't control the outcome, right? But you can put yourself in a likelier scenario to land on side, to land in a winning trade more often than a losing position, right? You're never going to have a 100% win rate. I don't have a 100% win rate. I have a bunch of break-even trades, but when these trades do spool and deliver to the targets, it's very, very rewarding because I'm not tilting during the in-between, right? Of course, you make slight mistakes, trailing stop too close, too early, too aggressive, whatever, little nuanced things. That goes into the performance aspect. But more so, you need to be taking trades within a specific model. Okay, so if you're new here, please, please, please dig into your charts, back test, forward test, go mark up charts, go on my Discord, my free Discord, the link will be in the description, and send charts, ask questions. Okay, it's super simple. It combines time with price. And again, you're going to see how easy it can be sometimes, how simple it can be. You just have to wait for it to be present in the market. So again, please like the video, leave a comment if you have any questions or if you enjoyed the video. Again, hit that subscribe button, and I will talk with everybody soon.